Last year, Becky Quick went to Japan to talk to Warren Buffett about him increasing his stake in Japanese trading houses. Been looking at the Nikkei since then. Nikkei outperforming the S&P since then, up over 50%. The S&P up just about 36% since then. A lot of money is going into Japan since then. Where do you still see the opportunities in the Japanese markets?
Sure. I think you're right to point out that Japanese equities have performed quite well, but actually on, say, like a US dollar basis, perhaps it has more legs to go. In our view, actually, though, a lot of the rally that we've been seeing so far has been sort of concentrated more in the large cap names. And of course, in the earlier segment, we heard about the semiconductor names doing quite well. But actually, our view going forward is that it's going to be probably a more broad-based rally as we see more the smaller companies, albeit probably on the mid-cap range, do quite well. And we've already started to see signs of that in the June month as more and more global investors are anticipating a Fed rate cut that should bode well for some of the beaten down high quality names that are really, in our view, some hidden gems in this market.
Okay, so you're saying you're seeing some hidden gems in the mid caps and the small caps. That sounds very similar to what people say here in the United States. We hear a lot of people who are bullish on the small and the mid caps here, but that thesis when it comes to those small and mid caps generally is kind of based on the idea that we're going to get Fed rate cuts sooner than later. But a lot of similarities. You're saying it's a good valuation. Small caps and mid caps are trading at a discount compared to their large cap peers, similar to here in the U.S. What's the thesis for those small and mid caps over in Japan, though? Because obviously they have a very different central bank situation.
Absolutely. And look, from our standpoint, we think that it's increasingly going to be important that even in this mid-cap space, you're going to be invested selectively, especially for those companies that have the good P&L growth story and also the balance sheet improvement story. The reason why I'm focusing on these two factors is because a good combination of improvements on both those fronts means that your return on equity will improve, and that in turn will bode well for valuations going forward. In our view, in Japan, there is a plethora of investment opportunities where the return on equity has been low for a very long time due to the low capital efficiency and, of course, the macroeconomic situation that many of our viewers know. That is all changing, and it is changing for the first time in more than 30 years. And that's why we think that this paradigm shift makes it for such an interesting opportunity to invest in this space across not just the large cap, but also the all cap mid space. And I just came back with my colleague from North America and Europe doing a roadshow where we met with over 70 clients in 30 cities. And I can assure you a lot of global investors also find this part of the market very, very interesting.
Okay. Here in the United States, a lot of people are worried about frothiness, high concentration in the market. Are there any parts of the Japanese market that you think are equally as frothy, or plain and simple, you think the opportunity there has run out and that sector or those stocks have kind of run their course?
Of course, look, this market is also like the rest of the world where, generative AI and, the next generation sort of robotics has meant that, there are certain segments that has seen quite a bit of a run up in their share price. That is especially the case for semiconductor related names. And then, of course, the weak yen has meant that there has been a few companies that have really seen their share prices run up, especially amongst the exporters. But that said, if you look across the value chain in the semiconductor space, we will find that there are great companies that are in, say, the specialty chemicals that supply to the semiconductor chip makers, or be it the testing equipment makers that continue to trade at very attractive valuations. Those are the companies that I think are going to be the next star names, if you will, that will lead the gains as we see the broadening out effect in this market.